Electric cars are taking over America faster than anyone expected. In 2025, EV sales have exploded. Charging stations are everywhere, and almost every major automaker is pushing out new electric models. But while drivers are excited about lower fuel costs and cleaner driving, there's a side of electric cars that almost no one talks about, a side that could cost you thousands of dollars every year. And that hidden problem is your electric car insurance. Today, I'm exposing everything insurance companies never want EV owners to know. Why electric car insurance is so different, why premiums are rising, what secret factors control your rates, and what mistakes EV owners make that almost guarantee they overpay. If you're thinking about buying an electric car or you already own one, this video will save you more money than anything the dealership tells you. Let's start with the biggest truth of 2025. Electric car insurance is not cheaper than regular car insurance. In fact, for most drivers, it's more expensive. You've probably seen all the ads: EVs are safer, EVs are new technology, EVs require less maintenance. And that's all true. But none of those things matter if the insurance companies don't see them the same way. Here's the first hidden reason why EV insurance is rising: the cost of repairs. Even a minor accident on an electric car can cost thousands more than the same repair on a gas vehicle. Why? Because of the battery. The battery in an electric car is the single most expensive component. One mistake, one dent in the wrong area, or even minor impact can force insurers to replace an entire battery module. And in 2025, battery replacements are more expensive than ever. Here's a shocking example. A small fender bender that used to cost $800 on a gas car can now cost over $6,000 on an EV, because sensors, battery plates, and electronic components are located behind that bumper. It's the same story with side panels, quarter panels, and even door repairs. These parts aren't just metal. They contain wiring, sensors, insulation, and integrated tech that drives the car. Insurance companies know this, and they pass the cost to you. But high repair costs are only part of the story. The next hidden truth is the limited availability of EV-certified repair shops. Even in 2025, most body shops in America are not qualified to work on electric vehicles. That means insurance companies have fewer repair options and longer waiting times. When repair networks are limited, insurers pay more, and so do you. Now let's talk about one of the biggest secrets. EVs have higher accident severity. Not accident frequency, severity. That means EVs don't crash more often, but when they do crash, the damage is worse. Electric cars are heavier because of their batteries. A heavier car hits harder, absorbs damage differently, and causes more structural impact to both vehicles involved. This means higher payouts and higher premiums. But here's the part nobody ever tells you. Insurance companies use different formulas for EV drivers. They analyze your charging habits, your mileage patterns, your driving locations, and even how often you fast charge. Yes, insurers now look at your driving data more closely than ever, especially with built-in telematics. And if your EV has advanced driver assist systems, insurers expect you to use them correctly. If your car has lane assist, autopilot, or collision monitoring, but your telematics show inconsistent driving behavior, some companies actually adjust your rates upward. You bought a safer car, but they charge you more for not driving like the system expects. Now let's uncover something even more surprising. Battery health affects your insurance cost. In 2025, insurers have started using battery degradation reports to estimate risk. A weak or aging battery can reduce range, impact performance during cold weather, and increase the risk of sudden breakdowns. Companies quietly factor this in, and you never see it listed anywhere on your policy. And if you think EV theft isn't a problem, think again. Electric cars topped the list in 2025 for the most stolen tech-focused vehicles. Why? Because the resale market for EV parts, modules, and battery packs is exploding. Thieves don't steal EVs for joyriding. They steal them for expensive components. Insurers know this, and some models now carry a theft risk surcharge. Now here's a hidden factor almost no EV owner is aware of: software locks. Many electric cars require factory-level software access to perform repairs. That means independent shops often can't fix certain components without manufacturer approval. Insurers consider this a restricted repair ecosystem, and these cars are classified as higher-cost vehicles. If your EV is one of these restricted models, your premiums can be significantly higher. Here's something even more surprising about 2025. Charging location affects your insurance rate. If you live in an area with limited home charging and rely on public stations, insurers classify your vehicle as higher exposure. Why? Because public stations increase traffic frequency, parking risk, and theft exposure. On the other hand, drivers with level 2 home chargers often get lower rates because their car spends more time at home. But the biggest secret of all, the one that shocks every EV owner, is how insurers calculate total battery loss. If your battery pack is even slightly damaged, insurers often classify the vehicle as a total loss. Even a small structural impact can force a complete replacement. And when the cost of replacing the battery is higher than the value of the vehicle, the insurer totals the car. That's why EVs are being totaled more often than gas cars, even with minor accidents. Now let's talk about the dealership scam tied to EV insurance. When you buy an electric car, dealerships push extended warranties, service packages, and battery protection plans. But in many cases, these plans overlap with coverage already included in your insurance. Yet drivers pay hundreds extra every year for duplicate protection they don't need. Some drivers even pay for 2 versions of roadside assistance, one from the insurer and one from the dealership. But here's the good news. Not everything about EV insurance is bad. There are hidden ways to lower your premium that most drivers never take advantage of. The first trick is choosing the right model. Some EV cars are significantly cheaper to insure because their parts are easier to repair, their batteries are modular, and their systems are simpler. Models with cheaper panels, separate battery compartments, and strong repair networks always get better rates. Second, insurers give discounts for level 2 home charging, clean driving data, low mileage reports, and advanced safety features. If you consistently drive within the ideal efficiency range, many companies quietly reward you with lower rates. Third, bundling your EV policy with a home solar policy can unlock special green energy discounts. Yes, solar panels on your home can lower your EV insurance premium because it indicates responsible energy behavior, homeowner stability, and long-term EV commitment. But the biggest money-saving trick is comparing rates every 6 months. EV insurance varies wildly between companies. Some overcharge because they fear EV repair costs. Others specialize in EV coverage and offer far lower prices. The difference can be hundreds per year, sometimes thousands. Because here's the truth. Electric car insurance doesn't have to be expensive if you understand how it works. The more you learn about battery risk, repair networks, telematics, and model differences, the more you can cut your premium. And that's exactly what most EV owners never do. But stick around, because in my next video, I'll show you the exact EV models that cost the least to insure in 2025 and the smart driver hacks that can lower your premium by up to 40% without changing your coverage. You don't want to miss that.